standard, first we saw the sources of misstatement, है ना, ODI. Omission of financial statement, element, account or information, omission of disclosures which is required in accordance with GAAP, disclosures not in conformity with GAAP, difference between the judgments of the auditor and the management, incorrect accounting estimate, inaccuracy in gathering or processing data from which the financial statements are prepared. Then after that we talked about the risk assessment procedures, IAOR. Inquiries of management and others within the entity, analytical procedures, observation and inspection, and then also a few related activities. Then after that, understanding the entity and its environment, you need to understand 6 things. External, internal, then the past, the future, and the accounting system and the internal control system. External, the industry, regulatory, and the other external factors. Internal, the nature of the entity, including its operations and ownership structure, governance structure. Measurement and review of the entity's financial performance. The objective strategies and related business risks. The selection and application of accounting policies, and also the 5 components of the internal control system, namely PRISM. What is PRISM? Control environment, risk assessment, information system and communication, control activities and monitoring. Then we also saw information technology, what are the benefits and what are the risks associated with the use of information technology. And then after that, finally, we assess the risk of material misstatement, which would be at the financial statement level or assertion level. And further, what did we study? Okay, assertion level, further you need to check which assertion is the risk. Right. Then after that we saw okay, when does an RMM require special audit consideration? Yani when does it become an SR? Has significant risk. When risk is a risk due to fraud, related parties, complexity of the transactions, unusual transactions, significant measurement uncertainty, significant changes in the economic regulatory environment. And then we saw some examples of conditions and events that may indicate an RM. Like operations in regions that are economically unstable, and operations and the lack of personnel with appropriate financial reporting skill, investigations by regulatory organization, shortages of supplies, change in the supply chain of the company. Right? So those were conditions and events which indicate a RMM. Right. Then after SA 315, we came to SA 330, the auditor's responses to assess risks. So first in the standard, we talked about the overall responses to the RMM at the financial statement level. And now we said more. More of an attitude of professional skepticism, more experienced staff, more supervision, more using work of an expert, more extensive audit evidence, more persuasive audit evidence, more number of locations to cover, more of an element of surprise in the audit, more procedures at the period and date rather than an interim date. And it says the combined approach of TOC and substantive would be an effective approach. Right. Then after that, we talked about SO control and substantive procedures. What if you've performed TOC in the previous audit? And that there is no change in control since they were last tested. And it's a standard says that auditor, you need to perform the retesting of controls at least once in every 3rd audit. And if based on understanding of the entity, there is no change in control since they were last tested, the auditor should perform the retesting of controls at least once in every 3rd audit. So 1 audit you do TOC, 2 audits you can go on holiday. And again the 4th audit you will have to do TOC. Again 2 holidays, then again TOC. However, what are the circumstances which will warrant the auditor to reduce the period of retesting of controls? Weak control environment, weak monitoring of controls, weak general IT controls, changes in the personnel, changes in the circumstances, nature and size, and also inappropriate manual intervention. And then substantive procedures, we have 4 prakar. You understand, no? Test of detail, substantive, analytical, agreeing the financial statements to the underlying records, and examining material journal entries. And what is the first line in substantive procedures? Irrespective of the assessed RMM, the auditor shall design and perform substantive procedures for each material class of transaction, account balance, presentation, and disclosure. Right? So substantive procedures, and where we perform to obtain the sufficient appropriate audit evidence. What if you don't get the sufficient appropriate audit evidence? And attempt to obtain further evidence by performing alternative procedures. What if you still don't get the evidence? Then qualified opinion or a disclaimer of opinion. Right. Then in SA 330, they have also described what do you mean by nature, timing, and extent of audit procedures. कि कैसे check करना है, कब check करना है, और कितना check करना है. Right. Then we came to the last in the series, SA 450. Which was regarding evaluation of misstatements identified during the audit. Identified misstatements, uncorrected misstatements, corrected misstatements, factual misstatements, judgmental misstatements, and projected misstatements. Right? Then we said step 1 in the standard auditor accumulates all the statements identified during the audit other than those which are clearly trivial. Then for these identified statements, you need to check whether the revision of the overall audit strategy is necessary. Yes, the audit strategy may require revision, one, if the misstatements have already exceeded materiality or where they may exceed materiality. Then identified misstatements, CMC. Communicate to management and request to correct. Now what is there with you? Uncorrected misstatements. Now for uncorrected misstatements, you shall reassess materiality. But while reassessing materiality, not only to consider the uncorrected misstatements related to the current year, but also those related to the previous year or years. Then uncorrected misstatements, CMC, communicate to management, request to correct. And if you don't agree, written representations from management, communicate to those charged with governance and modify opinion in accordance with SA 705. Right. So yesterday, this was the risk-based audit approach which we discussed. And this is the risk-based audit approach. And a risk response and reporting 315, 330, 450. And the three best friends together. And these are the three standards which we discussed yesterday. And then 450, I had discussed one more question with you. Circumstances due to which misstatement could be evaluated as material. And we said all examples of qualitative material misstatement. It affects the ratios, it affects the debt covenants, it affects the regulatory requirement, it affects the segment information. Right, so those are all examples of qualitative material statements. Right, so that okay, this is up to what we have completed yesterday, 315, 330, 450. Right, so what are the standards that we have done so far? One, SE 200, which is on overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. 210, agreeing the terms of audit engagement. 700, forming an opinion and reporting on financial statements. 701, communicating key audit matters in the independent auditor's report. 705, modifications to the opinion in the independent auditor's report. 706, emphasis of matter paragraph and other matter paragraph in the independent auditor's report. 500, audit evidence. 315, identifying and assessing the risks of material misstatement through understanding the entity and its environment. 330, the auditor's responses to assess risks. And 450, evaluation of misstatements identified during the audit. Right, so let's first see the question bank of 315, 330 and 450. Right, 315 has got a huge question bank. Right, page number 1.59. So rather audit risk we discussed in SA 200, but the questions of that also we'll cover in SA 315 only. Right, are you all there? Question number 1. Right, while commencing the statutory audit of B Company Limited, the auditor undertook the risk assessment and found that the detection risk rating to certain classes of transactions cannot be reduced to an acceptance level. Or while conducting the audit of Sunrise, as the statutory auditor found that detection risk relating to certain transactions cannot be reduced, as a statutory auditor, how would you deal in given situation? So one, you have to explain what is detection risk. That the procedures performed by your auditor to reduce audit risk to an acceptably low level may not detect a misstatement that exists. And that is detection risk. And to reduce detection risk, the auditor needs to obtain more and more of sufficient appropriate audit evidence. And if he is unable to obtain the sufficient appropriate audit evidence, that means he is not able to manage the detection risk to an acceptably low level. In that case, he can issue a qualified opinion or disclaimer of opinion. You understand? He can issue. What were you saying? Additional procedures, and even after attempting to obtain evidence from us, if he does not get, then he will issue a qualified or a disclaimer. You understand? So SE 315, 330 establishes standards on the procedures to be followed to obtain an understanding of the accounting and internal control system and audit risk, inherent risk, control risk and detection risk. So they talk about the three components of audit risk. And a detection risk is the risk that the auditor's substantive procedures will not detect a misstatement that exists, which would be material. And the higher the inherent and control risk, the more the evidence the auditor would like to obtain from substantive. And if RM is high, detection is to be kept low. And to keep it low, you will have to obtain more sufficient appropriate audit evidence. When both inherent and control risks are high, the auditor needs to consider whether substantive can provide evidence to reduce detection risk and therefore audit risk to an acceptably low level. The auditor should use professional judgment to assess audit risk and to design audit procedure to ensure that it is reduced to an acceptably low level. If it cannot be reduced, the auditor should issue a qualified or a disclaimer. So obviously, see, these answers you again can write in your own language, but again you can't write that unless and until you've understood. Okay, generally, whatever technically you have studied, that is what you should write in the answers. Your own understanding, your own experience should be avoided in the ICAI exams. BCom exam, you can go for that. And ICAI exams stick to what is you have learned, not what you think. Always give a preference first to what you have learned. And if that is not available, then think. Okay, right. Next one. In the course of audit of T Limited, the audit team is not sure of the possible sources of statement. I told you, ODI, one day international. And so 2 times asked in the exams, and 4 mark May 2013 and May 2011. The general factors to be considered by an auditor while taking up engagements, that's KOC. And the external, internal, past, future, accounting, internal control system. What are the major sources of obtaining this information? Oh, so from where will I get information? All external, internal, past, future, accounting, internal control system. The discussions with the employees. Discussion के अलावा कुछ बोलो. Internal audit report, memorandum of association, articles of association, the website of the entity, the annual reports, the MIS reporting, the industry, public, how the industry works. Again, you are writing regarding what you need to understand. I am asking you the sources of information. So you can write industry, publications, trade journal, magazine, newspapers, or textbook. What you are telling me how the industry works. I am asking you from where will I get information regarding how the industry works. Sources to obtain information regarding the KOC. So the client's annual report, minutes of the meeting, internal reports of the management, previous year working papers, form personal